By 2050, 1 in 5 human beings on the planet is going to be African. 1 in 5. And most of the kind of economies, the world economies, are declining economies, right? So, and by that, I don't mean the economics of it, but just the buying power, because their demographics are declining. So fewer children are being born in the West, fewer children are being born in the East, but in Africa, we still have more children being born.
My next guest grew up in Zimbabwe and built a career that most people only dream about. And then she did something very few people at her level ever do. She turned around, looked back at every African entrepreneur still trying to figure it out, and said, "Let me show you exactly how it works." Monica Shupikai Simmons has spent over 15 plus years in the rooms where money decisions about Africa gets made. She started in financial advisory at Deloitte & Touche and PricewaterhouseCoopers across New York and London. She launched the African practice at Icon Tech Investment Bank and led some of the most significant fintech deals across the continent. Today, she's the head of private capital at Rand Merchant Bank in London, one of Africa's most powerful investment banks, where she raised capitals from global institutional investors for African funds and businesses. She holds a bachelor's degree at the University of Cape Town, an MBA at Oxford University Business School, and she is a qualified chartered accountant. She's also a mentor at the Set Squared, which is Europe's leading startup incubator, where she speaks at conferences around the world and funding fintech and Africa capital markets. And if that's not enough, well, she did more. Last year, Monica wrote a book. It's called What's the Deal, Africa? And it's a step-by-step guide for African entrepreneurs on how to raise capital. Because after 15 years sitting on the side of the investor table, she decided the most important thing she could do with everything she knows is give it away. If you're an African entrepreneur, an investor, or anyone trying to understand where the money is and how the money moves across the continent, this conversation is for you. I am extremely excited to have her on the show and very proud to call her family. Please welcome Monica Shupikai Simmons to Africa Capital Connect. Monica, thank you and welcome to the show.
Thank you, Kwame. It's a pleasure to be here.
Monica, let's start from the beginning. I want to understand your journey, where you grew up, where you started, how you became who you are today.
Yeah, I consider myself to be one of the lucky ones. I grew up in paradise. I grew up in Zimbabwe in I'm old, so let's say the 80s, I guess. And it was fantastic. It was a real paradise at that time. I got a loving family. My parents were always really supportive. I was close to my dad, really close to my dad, actually. A big hand in my getting into finance because he worked for the Zimbabwe Development Bank. And so I understood about finance from an early age because my dad, didn't look at me and go, daughter. He looked at me and said, child. And so he was, I always say he's the original girl dad because he just spoke to me like he would any son, I guess. And so I had a good understanding of finance from a very early age. And my dad just let me believe that I could do anything I wanted. I'm the oldest of 4 kids. So take what you may, oldest child, right? So I do kind of get stuff done. That's my thing. And I was always a diligent student. I also happened to be educated by nuns at a convent, proper nuns for high school. And that has instilled a very strong moral compass in me, actually. So I've got a big thing about ethics. I've got a big thing about integrity. And just how to do business and not even business, how to do life, really. I really believe in that you should always, just be honest and you true to your word and that kind of thing. So a really strong foundation back in Zimbabwe. I didn't leave until I was 18, just about 18, which most people don't believe, but genuinely didn't leave them until I was about 17 or 18. So fully all my childhood, 100% Zimbabwe. Catholic family, so Christian basis, but like I said, really strong on morals and ethics and numbers. I was always a bit of a whiz with math, and I knew I was going to work with numbers in some way. I thought I might be an engineer or a pilot or something like that, but it ended up being finance and accounting because I've always liked numbers, always attracted to numbers. I did my undergrad in Cape Town at the University of Cape Town, best university in Africa. Tell everybody that. I tell everyone. And it was fantastic. I still have a very soft kind of an attachment to Cape Town. I really love it because my experience there was excellent. It was the first time I really had an understanding of the world, how international Africa was, because we had people from all over the continent educated at the University of Cape Town, and it was just excellence, really, just African excellence, and I loved it. I thought that was excellent. I loved it. I loved it. Really, just loved it. And to this day, when I travel to Cape Town, I still go. One day I'll be back. In my retirement kind of thing. I've always loved Cape Town. I did my undergrad there. It was in finance and accounting, of course. And that's when I got exposed to kind of the finance side. I mean, I understood accounting from even high school, but finance, the world of finance, money, how to make money, how money makes money, that kind of thing. I didn't learn about that until I was at university. And I remember being quite surprised that a lot of my classmates had a sense of what that was. And I had no idea. I'd never heard of the stock market and trading. I mean, I just didn't know this stuff. So, so today, actually, I care about educating my fellow Africans. And in fact, you talked about the book that I wrote. Part of it was is just to educate, because I feel like if we had a little bit more information about money, we would understand money better as a people. And so I'm quite big on learning more, because I did all my learning when I was about that 18 to 21, 22. I got to the UK after I graduated and did my chartered accountancy here with PwC. And again, very international, very global. London is just that kind of city, really. And I got to understand how money flows, right? So I was working in finance, money flows coming in, just understanding big numbers, millions, tens of millions. I'd never seen that before. And it was all just really exciting, because it wasn't attached to a widget, which is what I'd always assumed money was. But actually, just again, the flows of capital was all quite fascinating to me. Yeah, it was just the beginning of a journey for me. I mean, after that, I went across to the US. Spent some time in New York, a long time in New York, actually. Went from audit, financial advisory, ultimately investment banking. I did some consulting in between, but it was just a very exciting time for me. And the whole time I was learning about money, right, and understanding how money works, how companies work, how companies use capital. And I realized at some point that I care about Africa so much that I want to be a part of the solution for Africa, and how we can solve our own problems if we got some of this money, because there's just so much money in the world, but none of it was coming to Africa, and I was very aware of that. And yeah, so that's how I ended up leaving the US to come to focus on the African market. Was basically when I was doing my MBA. I did my MBA at Oxford, and it was a leadership course, kind of thinking about being the change you want to see. Like, what do you want to see in the world, and how are you going to impact it? And I knew I cared about Africa, and I wanted African people to rise, so to speak, right? And I believe, and I'm pretty capitalist, so I really believe that having jobs, at the end of the day, that's capital, that's businesses, that's how do you help small businesses grow, because they employ people. I just really believe that we could solve all these problems that we have on the continent ourselves. We just needed to get all the right kind of ingredients. And so the entrepreneurs had to do their thing, employees have to do their thing, but I had to do my part, which is I had to help bring the money, right? That's my job, is to help the entrepreneurs grow and grow their businesses. They need capital, and I thought that was the role I needed to play. So this kind of question around, what are you going to do about it? It was just like this wormhole, it was just in my mind, like, what am I going to do about it? And it didn't sound like going back, after I graduated, to go back to the US and work in investment banking in the US. It just didn't sound like that was it. I needed to be doing African deals. And it was it was not as simple as I thought. I thought I was just going to get a job at an African investment bank done. But because I didn't want to do M&A, I wanted to do growth capital, which is just helping companies to grow. It was impossible to kind of find the perfect job. And someone once told me, if you can't find the job, you have to kind of create it yourself. I got incredibly lucky and came across Icon Tech Investment Bank in London. It's a boutique investment bank. And I was able to just say, I want to do African deals, and they didn't think I was crazy. And I said I wanted to help African companies raise capital, and they didn't think I was crazy. And that was the beginning of something. And so um, all I've done is kind of transition from very early stage, which is what I was doing at Icon, to doing growth and kind of late stage investments with RMB, which is what I do now. But at the core of it really is just helping African companies raise the capital they need to grow so that we can employ people, solve problems, and just kind of do it ourselves. But we need money to do that. And I am not a fan of donations, so we should probably not talk about that because I'll come across really badly. I'm not a fan of like philanthropic type projects. I am a fan of investment. Give us the capital, we will invest the money, invest it with us, we will grow the money, we'll give you the money back, you do it again. We don't need one check, we need continual kind of investment in African ideas and African businesses. And yeah, that's me in a nutshell. And I'm hoping you can see the thread right from like where I grew up, because I really believe that we've got everything it takes on the continent to kind of solve our problems, and I believe in that genuinely.
Excellent. Monica, that's good. I want to take a step back to your transition from Zimbabwe to Cape Town and to the London scene at the age of 18, you said, right?
Yeah.
How was that transition? Because I remember when I came from Ghana to the US at a young age, 10, 11, the teasing, the making fun of, being African. Did you go through that in London as well? Was it a huge transition for you?
I didn't. It's like, yeah, it's actually interesting you asked that. No, I didn't. I didn't actually. I didn't have any of that. So the transition from Zimbabwe to South Africa was fascinating. And that was just because Zimbabwe, we were a lot more integrated than South Africa was at that time. So my classmates were white and Indian, and it wasn't even a thing. Not even a thing. And then I went to South Africa and it was definitely a thing, right? It was definitely a thing. And of course, the irony is that a lot of my lived experience was more similar to a white South African than a black South African, funny enough, because of just where we were as a nation at that time. So it wasn't the most natural fit for me to hang out with my black South African brothers and sisters than it was for my white South African brothers and sisters. Actually, we had a lot more in common, but that was based on lived experience. But that was just the stage of, post independence that they were compared to Zimbabwe, which I thought was absolutely fascinating. So the idea of black white actually got introduced to me when I got to UCT. That's the first time I really thought, oh, I'm black, they're white. I'd never really thought about it like that. And when I got to England, nothing. England's not like that. England's very cosmopolitan. I had zero issues around race. The one observation I absolutely made was that there were very few black people on the floor, on the deal floor. But to be honest, I think from when I left Zim, every room was always like majority white. So even at university, it was majority white, right? So getting to England and the office being majority white it wasn't a shock. It was just an observation. But a key observation also was that the kind of the brown people or black people in the room tended to be first generation. That was an observation. So we were from the Caribbean, we were from Africa, but it wasn't necessarily Black British. That's also an observation. And then when I got to the US is when I encountered maybe a little bit of racism, but that was because I was doing mid-tier banking. So the banks were like in the middle of nowhere. So we would fly to, middle America, small bank, cornfield types, go find the bank. And the expectation was the white guy on my team was head of the team, whereas I was actually head of the team. So that was a bit of a transition. I mean, I won't lie. I had a couple of experiences where the kind of bank representatives were not comfortable. Let's go with not comfortable speaking to me, and wanted to speak to my senior associate, who's a white guy. But you know what I mean? That's like these things happen. And for as long as you're not flying off the handle and crazy overreacting, you can kind of get through it. I mean, by the time I left, like that deal, for example, they were quite comfortable speaking to me, but the assumption was that the white guy was the guy who was running the team. So, you adjust to this stuff. And some of it also is just how you position yourself. And so you have to kind of let them know that it's actually my deal, my team. They're working for me because I'm running the deal team. It's an education and adjustment for everybody, but you can get through it.
Was it tough navigating that situation, especially being a black female?
So you're asking very interesting questions. So get this. So the part that I think that, because I'm trying to be politically correct here. Okay, so maybe I won't. Maybe I'll just not be politically correct. But a lot of what I get is I'm not what people expect. So when I started speaking, every time when I worked in the US, when I spoke, people thought I sounded English, so they would then go, "Oh, she's Black English," and so they kind of cut me some slack. They would be nicer to me. And I look, I'm not trying to. It was just how they treated me. So they didn't look at me and see Black Zimbabwean. They saw Black English, and so they treated me. Oh, you're from England, and so that was the kind of interaction that I had. And so it wasn't a problem. It wasn't a problem because they viewed me a certain way. And that's why I'm saying walking in the room, they would go, "Oh, it's a Black woman." But then within 5 minutes, they're going, "Oh, she's Black British," and they would treat me differently. And so, the kind of expectation of me and my ability to kind of run a team would then go, "Oh, they're quite comfortable with that." But and I'm not saying it's right. It's just kind of what it was, right? That's just how it was. So I didn't have any issues navigating race when I was in the US because of that viewpoint. I was constantly viewed as Black British. It was just the way I was perceived. And it wasn't a problem. It didn't cause issues for me. It really didn't. Except obviously when they walk in the room and then they would adjust, right? So yeah, yeah.
Has things changed, or you think it's still the same now today?
I don't work in the US environment so much, so I can't say for that. But I know, like in the UK, like there's just a lot. I see a lot of Black British young people everywhere. It's just fantastic. Like I'm like 20 years in. I'm old, right? So for me, it's like it's like an evolution, and I don't know what necessarily is driving that. I don't know if it's just more people kind of in finance, more Black people in finance, Black women, Black men in finance. But certainly at the levels that I'm speaking, I'm still the only one, but I'm not shocked. I'm not a shock. I'm not shocked to see that. If I'm speaking to an international investor, of course, right? That's the expectation. What I love now is I'm working for a Black bank now. I work for an African bank. It's phenomenal. And what I love is working with colleagues who know how to sell Africa to the world. That is phenomenal. Again, I'm not working with like colleagues where Africa is this place, and I'm correcting their perception of Africa. We are all African, all of us, Black, white, Indian, all of us, we're African, and we're selling the African opportunity to the world, and it's phenomenal. I'm very happy right now because of that. Everyone on my team, we're in the same direction, and we're selling the African story. And I'm the odd one out. I'm the one who's based in London, right? Everybody else is based on the ground. Our teams are in Johannesburg, Lagos, Nairobi. We are across the continent, and we are selling kind of the deals to the world, and it's great. It's really good to be a part of that.
That's
It's
excellent.
fantastic.
Monica,
Yeah,
you
yeah.
spent over 15 plus years on the investor side of the table at Deloitte, PricewaterhouseCoopers, PwC, even Icon, and now at R&B. What are the real reasons deals don't get done?
The thing about my job is I always get insights into what people really think, right? So I certainly as an advisor have insights into what founders really think, and I also have insights into what investors really think. So and this is part of why I wrote the book, right? Because the whole point was founders don't understand what's required of them, and when I'm telling them one at a time, or I'm telling them, and when I say one at a time, it's when they're my client, or I'm telling them when I'm giving a talk, or I'm mentoring a group, or I'm giving a talk. You know what I mean? I'm just talking about how to raise capital, but it's a cohort, it's a small group of people. And I kept thinking this is not going to work, because the solution, or like kind of the lifting of the veil, had to happen at a mass scale for all the founders on the continent to have an understanding of how to raise capital. It shouldn't just be the ones I talk to, or the ones who have access to someone like me. It should be all the founders. And of course, everything that you see online, if you're a founder and you go, how do I raise capital? You can go right now to Chat GPT and you can type it in, and it's going to pop up answers. Guess what? Those answers are designed for Silicon Valley. They're designed for Europe. They're designed for the Western world. They're not designed for Africa. And so even though there's this perception that information is actually readily available for you and you can Google and find it, it's not made for you. It's not. Because if they tell you to go to a mixer and you're going to meet investors, early stage investors, blah, 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 guess what? That makes sense if you're in California. That makes sense if you're in London, Frankfurt, I don't know, Paris, you name it. That can happen. You might even go to a mixer in Lagos and in Nairobi. Cape Town, Joburg, you can go to a mixer. If you are in one of the 50 other African countries, there's probably no mixer.
Right.
Right? There is no mixer if you're, I don't know, pick a country, Rwanda, if you're in Malawi, if you're in wherever, Benin, there is no mixer. So someone telling you to go to mixer is like, come on, right? Even a conference, how many conferences are coming to your town? And Africa's 54 countries. Everybody focuses in the large four. Everybody talks about South Africa, about Kenya, Nigeria, Egypt, Morocco, Ghana, there's all these other ones that are peppered in there. Everybody talks about those large markets. And to be fair, they probably make up 90% of transactions, right? But 100%, there are founders in other jurisdictions that don't have access to any of this stuff. And they have internet and they're trying to do something in their kind of country and they're Googling. And it's not right because the information they're going to find on Google, like I said, ChatGPT, whatever it is that you're using, that information is not relevant to an African founder. And so very quickly, I thought it made sense to share insights with African founders that are relevant to Africans. And that's why I wrote the book. Now, obviously, the catch is, and this is, I'm actually working on this right now. The catch is the book is available in the UK and the US. Haha, that's not where the founders are. So if you're somewhere again and you want it, you can't do it. So I'm said I'm going to give it for free. This is actually a decision I made like in the last week. So I'm setting up a website right now, and you can download it anywhere for free. You can just download it. You can get an e-version. If you want a paper version, you have to go get it from like Amazon, right? You can, but it doesn't make sense for it to be at Amazon. If I'm trying to get it to someone who needs it, there's just no chance so I'm just going to give it away. And then maybe I'll get lucky, and because I'm going to have a donation page, people who can donate should, right, on the page. But I'm going to give this thing away for free because the point is it's there for founders across Africa who do not have access to information, and they absolutely do not have access to Amazon, right? They just don't. And in the book, it's a step-by-step guide on how to raise capital, starting with what kind of a company am I? Am I startup tech or am I SME, right? So am I doing something online that people can do, or am I selling a widget? What kind of a company am I? When you're looking for capital, all of that depends on what kind of company you are. Then you know what kind of, are you looking for venture capital, or do you need something that looks more like a bank? Have you been operating for 5 years, or did you start last year? What kind of investors do you have? Is it bootstrapped? Should you bootstrap? Like all these kind of questions and answers. All of this stuff is addressed in the book, but I need to get it in the hands of the people that it really matters. And that's with the founders. And that's just not going to happen if it's sitting on Amazon. It just defeats the purpose. And the point was not to make money from this thing. The point was to get it in their hands. It's information. It's like education, right? It's to get it into the hands of the founders. So I made the decision like 2 weeks ago that I'm just going to give it away. And right now we're just working on the website. You'll be able to Google it and find it.
I have my copy here. How do you plan on communicating that information that is free now? Because I think that's really amazing.
You see, now we're talking in real time, and Kwame, I'm still sorting it out. So I guess I'll go on LinkedIn and I'll tell incubators, and I'll just tell people to tell people, but it's going to be free. You can just go get it. Honestly, just go get it. Because the point is it's needed, and we're not going to solve the problem by selling the book. They just need to go get it, right? And I was hoping that I could work with incubators, and the incubators would have them and people could go and get a physical copy from an incubator. But it's just turning into a logistical nightmare, and I have a job. I have a day job. I can't, I just can't. So I'm just going to put it online, and you can just get a copy for yourself, and you can just use it like a textbook. The idea is people can use this book to inform themselves as a founder on how to raise capital, step-by-step guide. Yeah.
There's a perception and maybe sometimes a reality that African businesses get valued lower, held at a higher risk standards, or even receive worse deals terms than equivalent businesses in other markets. Is that still prevalent in 2026? And if so, what do founders do about that? In other words, how should African businesses adopt the evaluation strategy to African markets realities?
So, look, the Africa story it's certainly one of rising, right? We're on the upward trajectory. I think that's just the way to view it. So yes, perceptions are changing, but they're slow to change, and the Africa risk is baked in. So if you think about capital and how it likes to flow, the easier, the more transparent kind of governance, taxes, legislation, all that stuff, everything needs to be kind of steady state for kind of businesses to really succeed. And so on that kind of measure, it's really difficult for Africa to compete with like a startup that is in I always say California, right? Because that's kind of the Silicon Valley is the world of startups. And so an exact same company starting up in Silicon Valley is not going to be the same as the exact same company, in Kenya. It's not. What we have, however, is there might be a higher risk, but there's a higher reward in Africa. And a lot of it is to do with all the kind of the demographics and other factors, right? So if you think high risk, high return, the returns right now when it comes to the African market are just really they're significant. If you think about our growth stats, one of the quotes that I always hear often, and I'm sure you've heard it too, is by 2050, one in five human beings on the planet is going to be African. One in five on the entire continent, on the planet, one in five on the planet will be African. And most of the kind of economies, the world economies, are declining economies, right? So, and by that, I don't mean the economics of it, but just the buying power, because their demographics are declining. So fewer children are being born in the West, fewer children are being born in the East. But in Africa, we still have more children being born. So even like India, which has always had like, a large population, in India, it's leveling out. It's kind of leveling out in terms of birth rates. So in terms of future consumers of all, whatever it is you're selling, the future consumers are going to be African. And that means the future workforce has to be African, so they're going to be able to kind of buy the thing that you're selling. And so the demographics just kind of lean to Africa. So if you're an African business, your market is growing. If you're a US business, your market is shrinking. And some of this kind of informs how business is done and how investments are done. So for example, there's a big focus in kind of Western companies to get market share. There's a lot of talk about market share, right? So if you think about like Facebook and how it started, you're going to go and get everybody, as many numbers as you can get, and then you can figure out how to monetize it, but you've got the market share. In Africa, it's a growing pie, right? So if you don't do anything and the pie is growing, your business is growing, right? So one of the things I don't like is this focus on market share when in fact ours is a growing market, right? So your business will grow because the number of consumers will grow because the number of people who are the consumers are growing, right? Demographics, which is why I'm saying that not everything is transferable from like a Western, like US centric viewpoint of what the world is compared to what's going on in Africa, where we are still growing, right? And so, if you think about a company, investing in a company, like I was talking about, the risk profile might be different for kind of the US. Risk profile for Africa is more complicated because of the things that we talked about, like governance. If we have elections, is it the same election? Who's going to win the election? Is it going to be some violence that happens because of that? Is there going to be some unrest? What happens? We don't know. What's the tax system? Is it stable? Is it still being developed? Could it change? We're not sure. What about forex? There's a lot of issues around currency devaluation on the continent because it's not steady. What does that mean? So if you get US dollars and you're selling your widget in local currency, even though your sales might be increasing in local currency and you're effectively making a lot more money, by the time you convert it to US dollars, it may be the same because guess what? The currency exchange rate has moved, right? That kind of thing. And so that creates all sorts of uncertainty around investing in Africa. And it creates like perceptions around how you value a business in Africa. And so what tends to happen is like if we're valuing a business, we will look at a similar business in kind of the West, use metrics around valuation metrics and multiples that are similar to the West, and then we discount for Africa. So you can take a, 20% discount, 30% discount, whatever it is, discount on that sector, on Africa, there's like an Africa tax to that, you see what I mean? So, and that's the reason why businesses are not valued the same per se, which is why the exact same business in Africa is not going to be the same as the exact same business in the West, because there will be that kind of discount factor that comes in. Because there are certain things in Africa which we're still kind of working through because we're still young democracies. Like I said, it's 54 countries, different languages, different, all sorts of things that kind of factor into what's a market share. I'll give you an example. If you are a business in the US, you've got 300 million potential, like the population, right? So your customers are going to be all speaking English, all these things. If you are in Kenya, 50 million population, and if you want to kind of expand your products and sell it into another country. Once you're in Uganda, maybe it's Swahili plus. Then you go into Rwanda. Now you're in Tanzania. Now it might be different languages, different currencies, different, you see what I mean? The risk profile changes. So for you to get 300 million as your market, it's not the same as a monolithic 300 million like in the Nigerian market or just in the US. It's different. And so all of those things come into play when you're thinking about the risk profile of a business and how you value it.
Monica, you mentioned something about how big African market share is and how eventually it seemed like most entrepreneurs have to either, invest in Africa. How do we balance the whole trust factor that we have with doing business in Africa?
Ah, another good question. I mean, you're on a roll. You're on a roll. Okay, so it's a very good question. So one of the things that, like, big picture, Africa, big picture, one of the issues that we have is we've talked about currency, right? So we each have so many different currencies. And my understanding is that there have been certain efforts to kind of have some version of standardized currency, so to speak, where you can have one currency that kind of operates for a region, because it's with 54 countries, and let's say as an example, 54 or 50 currencies, there's a lot of friction in the system, right? We talked about languages as well. There's a lot of friction in the system. If you look at Europe as an example, as a good example of where a lot of countries are in a relatively small geography and they've had to figure out how to work together, the introduction of the euro was really quite a big game changer in how they were able to do business. Because now we're talking about the same currency, right? It may not be the same exact price in different countries, as in that widget might cost different price, but at least when it comes to trading, it's a block, right? It's a block, a unified block. And so what we've been trying to do in Africa is to figure out how we can make things like reduce the friction in trade, whether that's at a currency level or we're just talking geography. Maybe like West Africa will have its own region. And so we'll try and figure out ways to improve the buying and selling of goods and the flow of capital within that geography. Similarly, East Africa, Southern Africa, I know we have SADC. There'll be all sorts of different regions that are trying to figure out how to do it. I think that's the beginning of thinking about Africa as a unified block where we can do more deals within Africa and be able to do more transactions, be able to do more, and so decrease friction and be able to get more returns that we can then enjoy. Because right now there's just a lot of friction. And so even if it makes sense for, let's say like Zimbabwe was known as the breadbasket of Africa. We grow a lot of kind of vegetables and, whatever you name it, we grow it, right? I think we're the third largest producer of like blueberries, something like that. Random facts. There was a time most of the roses, Zimbabwe, excellent roses, that kind of stuff. For us to be able to kind of export, it's easier for stuff to get shipped on a plane and sent to Europe than it is to send it to Zambia. The road rail network, not so great. Currency issue, not so great. Do you see what I'm saying? So for some reason, it makes it easier for us to kind of transact with the West than it is to transact amongst each other. And so there's just a lot of friction. And so in terms of solving some of the problems that we have, they really are at that level. And kind of tying this back to capital and what I do, it's why a lot of the solutions today around capital and investment into infrastructure make me very happy, because a lot of the issues we've had on the continent have been linked to infrastructure. We don't have enough ports. We don't have enough rail network. The roads aren't that great, because then we can't transport goods from A to B without it taking twice as long. And, all the friction, filling in forms, customs forms every time you cross a border, all these things. Technology can help, but in Africa, you still need the bricks and mortar. You still need electricity to work, roads to work, rail to work, ports to work, right? You need the infrastructure. And there's a lot of capital, global capital, that is flowing into infrastructure, which is a good thing for Africa. It's very good for us long term.
Monica, why do you think it takes so long for Africa to catch up to the West? Because even cell phones, like I go home and, cell phone connections is not that great.
Okay, so on the cell phone thing, I have to push back on that one, Kwame. I've got to push back. My cell phone reception is so much better in Nairobi than it is in London. No jokes. I can't get in a taxi, in a London cab, and go from one building to another building on the outside of London and hold a conference call. It will 1000% drop off. I don't know why. I honestly, it drives me crazy. Where I live, the train, oh my God, I can't have a conference call on the train because it's just very poor Wi-Fi, very poor data in terms of like 3G, 4G, that kind of thing. In Nairobi, I can the traffic might suck, and the traffic does suck, right? It's really bad traffic. But in Nairobi, I can be on a 1 hour call on my phone, and it's 5G the whole time. And this is to the point about leapfrogging. So there's certain things that we just don't have. We just never had the fundamentals. Like if I think about like telco in terms of wires underneath the roads, plumbing underneath the roads, all of the stuff like that, we're not great. We're just not. We're not great on the continent. It's not but leapfrog technologies that are like tech based, we are probably better. Mobile money, you cannot compete, right? We are the global leaders. East Africa, what you can do with M-Pesa, global leaders. I mean, you get kids flying out from like San Francisco, flying off to Nairobi, Kenya, just to see what people are able to do with mobile money. Everything in Kenya is your Safaricom, your your kind of M-Pesa, um, mobile money. We're global leaders in that. So it really just depends. And that's what I'm trying to get at, that there's certain things we are so far behind in, like this infrastructure issue is one that's been so painful. And that's why I'm so happy to see that we are definitely investing in infrastructure. But when it comes to technology, we absolutely can. Remittances, transfer of money, global leaders, right? We're global leaders. It's just all the other stuff that comes with it that we need to figure out, right? So we can leapfrog. I've recently been exposed to like the media side of things. It wasn't an area that I was particularly familiar with, but I've been quite interested in hearing and learning a lot more about it. So for example, when you talk about the US and movies, just a blockbuster, and how many people have gone in this weekend, and the latest movie, like the Michael Jackson movie, it's in theaters. IMAX can charge this much, a regular theater, blah, blah. Africa can't have the same impact because we don't have theaters, right? You're not going to, it's not like we have thousands of cinemas all across the continent. That's not how we consume media. Our media is consumed on our phone. Okay. So people are watching on their phone or figuring out how to get it from their phone on a screen, right? Or, over Wi-Fi, over data, that kind of thing. And so the solution for us when it comes to media and how we consume our media on the continent is a different solution for the West. Because we're not going to go out and build hundreds of thousands of cinemas for us to watch Michael the movie. Actually, you've got to figure out how to make people watch it on our phone, right, in a rural area, or in our TV screens, right? So kind of Netflix type thing. But I'm just trying to get at the idea that we have our own way of doing things, and so the solution, which is why I'm keen on Africans solving our problems our way, because we're not the same. We're not the same as everybody else. And so we just need to figure out how to do it for us. And so I've been, like I said, exposed in media lately about how you can watch clips, movie clips. So actually you can watch a movie in 4 bits and you can pay for it in 4 parts, or you can pay for it in 10 parts, or you can watch the movie on like a Nollywood movie on YouTube, and the creators get paid in Forex because it's YouTube. And they prefer that than to have it like on a different kind of a way of watching it. That's the way they want the content to be delivered. And what we're fighting for then is that they get paid the same as a US content creator. So YouTube needs to pay an African content creator the same way that they would pay a US based one, right? That kind of thing. And that's the kind of equality that we would like, because then it would really promote the African kind of content creator, that kind of thing. So I'm just giving that as an example of how we have to do things differently our way. But it's up to the African entrepreneur to solve the problem for Africa, because these are the guys on the ground. These are the guys that know what we need. And my job is to give them the capital, or to give them access to the capital so they can solve the problem and make sure that the people who do the investment get their return, right? And that's my part in this kind of solution for Africa.
If you could sit every African founder down before their first investment meeting and warn them about one thing, what would it be?
Oh boy. Okay, so in utopia. Okay, so this, I'll give you utopia and then I'll give you the real world, right? So utopia is you need an advisor. That's it. If you're going to raise capital, you should get an advisor. Why? An advisor knows more than you do. They know what to look out for. They know where to get the capital. You should get an advisor. That's utopia. I recognize that people can't get an advisor. I recognize that, right? That's part of why, like I said, the book is there, right? So that people can do that. The one thing that you do need is a lawyer, because the terms that you sign up for have consequences, not for today, but for future investment rounds. And founders typically don't know that or don't think about it. So actually, if there's one piece of advice is if you are going to spend money on anything, then spend the money on a lawyer. It doesn't have to be the most incredible lawyer. It doesn't. It just needs to be one who's familiar with what term sheets look like and what's expected in a kind of a sales agreement. Um, that way they can tell you what you're agreeing to. Because one of the things that I found painful working in early stage investments was that founders were so happy that somebody gave them a term sheet, that someone gave them money. They were just so excited about getting the money. They signed whatever they got, or they just read it and didn't see the catch. And then when things didn't work out, they didn't realize control was taken away from them and it was no longer their company. And I think that's really painful for a founder to realize how much power an investor ultimately has because they just didn't read the terms or they didn't understand the terms that they were signing up to. And for that, you need someone experienced. So if you can't get an advisor, you absolutely do need a lawyer just to look at it. Pay for that 1 hour consultation for the kind of the lawyer to look at that agreement and say, if the sky falls, what's my worst case scenario? And understanding what that worst case scenario is really important for early stage founders. I think it's very important. It impacts now and it impacts your next round because maybe you didn't realize that the only person getting diluted was you when someone else comes in. You didn't realize. Maybe you didn't realize that the ESOP you're going to create is from your holding. You didn't realize. You need to know these things when you sign the term sheet. You need to know that, and you need a lawyer. It's very important to have a lawyer.
You said African funds used to be able to count on DFIs, which is development and finance institutions, for majority of the capital raised. That model seemed to be now breaking down. DFI check sizes are basically shrinking. The U.S. pipeline has gone cold. So how do we navigate that sector right now?
Yeah, it's tough. So if you're a venture capital firm or if you are a private equity firm and you want to make investments on the continent, as they should, that's their job, right? That's their job to do that. A lot of them are in a bit of a sticky situation. Previously, they would go to kind of government-backed DFIs to access the capital. So we're lucky we live in a world where, especially European countries, they allocate a certain percentage of their budget, annual budget, to helping to support African countries or emerging markets. It's actually not an Africa thing; it's an emerging market thing. They help emerging markets to develop. And yes, of course, it's goodness of their heart, but also yes, that's their future kind of buyers of their market. We're talking about how, in terms of demographics around the world, the future consumer is from Africa, India, Southeast Asia. These are the future consumers of their products. And so it's in their best interest to care about what's happening. If things go wrong in Africa, people get on a plane and they go to Europe, right? Or they get on a plane and go to the US. So it's, again, in their best interest to kind of help people to stay where they are and do well where they are. There's a lot of reasons as to why they do this. But what's happened in the last, and I won't say few years, maybe few years, 5 years, it's just a trend towards being more nationalistic. And this is happening across the world, across the developed world. So whether you're in the US, think MAGA, or if you're in the UK, think, reform, or some of the kind of more right-leaning kind of politics is really rising across the Western world. There's a bit more focus on being nationalist and keeping money for themselves. And that means the amount of investment that is being made in emerging markets and stuff is declining. The capital that is available for that is declining. And that's not necessarily a bad thing, because it just means that the recipients of the capital, those VC and private equity firms that I was talking about, they just have to think a little bit differently about where they get the capital so they can make investments on the continent, right? So instead of relying on these DFI type organizations, we actually need to think about either getting that money and paying it back so that we get, they're not just giving us the money, they get back with returns. So we need to kind of make sure we're focused on returns, right? So the DFIs themselves are more focused on how much return they're making so that the same amount of money can kind of go back. They can keep recycling the money as opposed to just giving us, right? So that's one element. And then the second thing is, firms on the continent have to think about where else they can get capital. And to be honest with you, we have a lot of money ourselves. So our own governments have money. We have sovereign wealth funds. Most, if not all, African countries have got their own sovereign wealth funds where they're looking out for their own people, right? Most have got development banks. Development banks, like I said, my father worked for Zimbabwe Development Bank. We have African Development Bank. All the other African countries have got development banks. We're taking care of our own people, right? So we should be investing in our own businesses. Local pension funds. So whether that's a state pension, so employees of the state, or it's large institutions. If you think about large oil companies that are operating on the continent, all these kind of large organizations that have large pensions, they have to do investments as well. We have a lot of capital that belongs to Africa. And a lot of these institutions, instead of taking that money and putting it into a very, very, very safe bond in Europe somewhere or bond somewhere else, which again, I understand because it's a pension, they do have to be safe. What they tend to do is allocate a small percentage for more risky assets. And what we want is for that small percentage to maybe increase from 1 to 2%, or from 2 to 5%, or 5 to 10%, just to increase a little bit so that we can have a little bit more on the continent that we're investing in ourselves. And so part of my job is to show funds across Africa, venture capital funds and private equity funds, where those pools of capital are in Africa, our own capital, and to try and convince those kind of insurance companies, pension funds, and sometimes institutions like us, like the one I work for, banks, to just do a little bit more in terms of investing in our backyard. But think about it, the best way that works is if they get really good returns. And so it always comes back to the founder, right? The founder, we want a founder who's really responsible with the money that they get, that they don't get stuck on a great gravy train where they think they're just going to get Series A, Series B, Series C. They're going to keep getting money. We want our founders to be focused on being profitable and to have sustainable businesses, so that maybe the first check that they get is a little bit extra risky, right? But the next check, they're on it and they're profitable and they can take care of themselves, right? And that's what we want. So we're trying to encourage the founders to be a lot more responsible with the money that they're getting, and to get to sustainability where you're like profitable and taking care of yourself and thinking about debts as an alternative to equity. Maybe not everybody needs equity, that kind of thing. To just think about solutions that support a business so that it's not too risky for the pension funds, insurance companies, and whatever. And it's not too risky for the DFIs and other international capital. And that way we can get more money, right? So I'm hoping you can see kind of really big picture. Everybody plays a part in making it work. Everybody plays a part. But for me, at the fund, literally at the base, it's about the founder. It's supporting the founders in all the things that they do and the decisions that they make, how much money they take, how they grow their businesses, how many people they employ. That's where the focus needs to be, because all that money is kind of trickling down. And at the end of the day, the founder has to do well for the businesses to kind of pick up and be able to kind of sustain economies. Yeah.
Great points about that, because with the shrinking DFIs, it seemed like the diaspora collectively sends money, about 90 billion every year, back to Africa. Is there an argument that the African diaspora is actually the most important untapped source right now for capital?
Don't get me started. So I've been in many rooms where that has been the topic of discussion. That has been the topic of discussion. And the question is, how do you, quote, institutionalize that capital to be able to do even more? So, look, I don't know about your lived experience, but I live here in London, right? And my family is still in Zimbabwe. I've got family in Zim. Somebody needs money for school. Somebody needs money for healthcare. Maybe myself and my sisters, we want to buy a house together, build a house, right? You know what I mean? Like, I'm just saying that there are certain things that we're all doing. What we do is we send the money to a relative, right? Because remittances are, I'm sending person to person. I'm sending it to my relative, trusting my relative to pay the school fees, pay the bill for healthcare, pay the construction company guy, pay for all these things. And sometimes the money disappears, right? Sometimes it doesn't get there. I mean, these things do happen. And so I've been in many rooms where we have talked about, how do we do more with this money? How do we do more with this money? And I've been in, it's an ongoing thing that people are trying to solve. How do you make it so that the money goes directly to the school? Do you have to, that's a business waiting to happen. How do you send the money directly to the construction company or the health? I got excited because we had a family member who was at a hospital in Zim, and we're dollarized, so everything's in USD, so it's expensive, right? And the bill needed to get paid. And guess what? We got a QR code, and it was a PayPal, uh, which I thought was phenomenal. I love that solution, but is everybody doing that? Are all the banks, sorry, are all the hospitals doing that in Africa? I don't know. So there's a lot of, this is why I'm saying that the people on the ground in Africa know the need. And what we want to do is to help them to develop the businesses to solve these things, because the money is flowing from the DFIs, right? From our national institutions, right? And also from our relatives. The money is flowing. There is money that's flowing in. It's just how do we make the most of that? How do we make it so that Kwame can get a loan with your bank in the US and build a property back home? Or how do you, sitting in the US, get a loan in Africa and build a home in Africa? All these things are like friction points that need solving, and all of them would make things better for yourself and for the Africans in the diaspora, and it would make things better for the Africans on the ground. You see what I mean? And that's why I'm like, there's a lot of opportunity on the continent. We just need to figure out how to make things less complicated. And that's the business opportunity. And there are people doing this. They're founders, entrepreneurs who are solving these problems, but they need capital. And like I said, I am not a founder. I see gaps all the time, but I'm not a founder. That's not my job. My job is to help the founder access the capital. And that's why I'm saying I get to be privy to listening to these guys. I'm always in awe of like founders, to be honest. They have all the solutions about how to do it. They need our support in the capital so they can try it out and fix it. And there's a lot of talk. You remember like maybe a few years ago, after like there was a downturn and a lot of the businesses were failing, and it was like, oh, this company failed and that company failed, and what do people think, and it's really bad. I've always been so optimistic about it because I genuinely believe that in a lot of instances, when a business fails in Africa, everybody who was part of that decision-making team, that quote C-suite, right? The CTO, CFO, whatever, all these guys that were at the table, the decision-making table, when that thing falls, all of them are going to go start a business. In Africa, you don't get a chance to go get employed by someone if it fails. You go start another business. So actually what you're doing is the next generation of people who are starting new companies. And those people, guess what? They now know how to run a business, including when it fails. They now know what not to do. So there's actual education in there. And so the next generation of founders are actually going to be better than the last generation. And so I don't have a problem with like supporting founders or being able to work with founders that have a failed endeavor and it didn't work out and they want to do it again. They know more than someone who's fresh-faced. They've seen it. They have some experience, and that's a good thing. It's not a bad thing. But like I said, you expect me to say that, right? Because I'm very much team founder and team entrepreneur, because these are the guys who are solving the problems on the ground, and they just need our support.
I think that's great you see that from your lens, Monica, because I feel like, you're African, you understand what's going on. But I think most investors that are not African, you feel one business, they're not giving you any other investment, right? It's like, it's a done deal.
Yeah. And just kind of linked to that, Kwame, actually, you've touched on something quite important. Is that there's a lot of conversation again, a lot of dialogue around like, what are the VC models, the investment models that we're using, are they appropriate for Africa? Are they the right models for Africa? Because, like a VC that works in Silicon Valley, you can't copy paste that and then bring that to Africa, because Africa's a bit different. And the model for what a private equity firm does in Europe may not be the right private equity firm structure that works in Africa. And we're trying to figure that out. For example, and I'll give you two examples, right? So on the VC side, you were just talking about, all these guys that are like, what do they know? Like lived experience. A lot of the venture capital investors were educated in the West. So like I'm an Oxford grad. A lot of these guys are Harvard grads, Stanford grads, great, excellent education, except all the case studies I was doing, all the case studies they were doing were US case studies. So it's all well and good. You get on the ground and now you're going to start advising these companies on, what you're seeing and what's the right thing to do. Is it really? Because Africa's different. And so I'm a big advocate for kind of VC firms that have, as part of their team, it doesn't have to be everybody, but as part of their team, to have founders, ex-founders, as part of either advisory boards, IC boards, or actual partners who are doing the investing, because I really believe that the lived experience on the continent is so important in how we invest and support our founders. It should not be just what school did you go to. You know what I mean? It just shouldn't be that. And I say this, like I said, as an Oxford grad, right? Because I know the guy on the ground, the guy I'm supporting knows everything. That founder, that guy who's been like in the trenches, knows everything about his market more than me. And my theory from, that works for Silicon Valley is not going to work for Lagos, right? It's just not going to work for Nairobi. So I'm big on that. So that's one example, right? I'm giving you a VC example. And then on the private equity side, one of the issues that comes up with private equity is the structure of private equity means that by the time you get to 5 years, 7 years, it's time to exit. You got to shut this vehicle down, right? Because it's a closed pool, and you got to give money back to your investors, and you've got to have had some exits and all this stuff. When actually in Africa, it takes so much longer for the business to kind of get to that stage. That graph looks like that, right? And as we're hitting that part, which is the 7 to 10 year phase, it's time to close down the fund. It's like, come on, right? So we need to kind of rejig it so that we either increase the amount of time it takes before you start to wind down the fund. So maybe a standard fund shouldn't be 7, it should be 10 years, maybe. Or we do more in the secondary space. And I'm so pleased to be seeing quite a few secondaries in kind of private equity firms where they come in at year 7. They come in at year 7 and they take it until year 10 and sell it, right? But of course, the annoying part is they get a lot of the upside when the company, the investor that's been with you, that private equity firm that's been with you for 7 slog years has to sell just as things are really kind of hitting the smooth, things are getting really good. And so, look, what I'm describing are the issues that we have in the system, but it's because I think we kind of need to Africanize it. We need to make it more relevant to what we do in Africa, what's needed in Africa, just so that it works better for us, because we are not Silicon Valley. And I'm going to keep saying that we're not the US and we're not Europe. We have to do things our way.
Monica, so women-led businesses in Africa seem to be historically underfunded. As a woman in capital, what are you doing as far as, are you consciously making efforts to try to fund these women-led businesses? Or because I feel like eventually it's going to cost the continent a lot of money.
We don't get to where we should be. Yeah, we don't get to. So the reason why I'm shaking my head, because you can see me shaking my head, is because it's basically ridiculous. It's ridiculous. And some of it is even cultural. Like I don't know how things were in Ghana, but where I grew up, the women were on it, right? The people selling stuff on the side of the road, women, right? It's always the women are all up in there doing it. And so to think that now we're formalizing it, right? So informal sector today, if you go to a market in Africa, it is still majority women. Okay. So at that level, it's still majority women. But to think that now that we're institutionalizing our businesses, we're going from, side market to an actual store to an actual business with chains. Now we're excluding women from this. To me, is just ridiculous. It is actually, it's stupid. That's what I think. It's stupid. And so I don't want us to bring again kind of these kind of Western ideas about what's an ideal founder, and it looks like a white male. Therefore, in Africa, it looks like a black male. I don't like that. I don't like that at all. I think we need to do what works. And so I think that does mean more investment in women. I really do think that. But the reality of the world we live in is that people tend to invest in people who look like themselves. And we can have a whole separate podcast about why that is. I'm sure there's all sorts of psychological reasons why people do that. But people do invest in and trust people that look like themselves. And I use that word trust on purpose, right? It really is an underlying trust. And so in some instances, you have to build up to trust, right? In which case it's not like a given, it's not standard. You have to build up to it. And that friction in having to kind of build up is what takes time. And so the idea is over time, you will have more women who go to Harvard, right? And Stanford and Oxford, and who join VC firms and then end up being a partner and therefore a part of the decision-making team that invests in women. Okay. And we're seeing that already. I have seen female focused funds on the continent, which makes me so happy because we're recognizing that there is an issue and we're trying to address it already. So it is happening. It is absolutely happening. And one of the things that I actually like about some of the money that we're getting from the DFIs is some of the DFIs have lenses, right? Which is to say they like to see, and they like to see a climate lens. So that means they want to see something that's really good for kind of the climate. They also like to see gender lens, things through a gender lens, so they can see that X% of a private equity fund or X% of a venture capital fund is investing in female founders. I like that very much because it's a reminder that you might have these biases, but actually you need to be conscious about investing in something that you don't always know. You know what I mean? Because not some of the products and some of the kind of the kind of tech that's being developed is female leaning, and you can make an argument, yeah, that's very for women, but a lot of the stuff is just it's a solution, whether it has a woman at the helm or not. It's a solution, and we should be backing the founder, whether it's a woman or man. So I care about it a lot.
I mean, overall, you seem like you care about helping Africa a lot. You seem like you want to see changes in the continent. My question is, what motivates you?
So that's a big question. I love Africa. I do. I've never not been African, which is interesting because there was a time I would have done anything to blend in. So I remember when I first, not so much London. When I was in London, it wasn't a thing. I remember getting to the US and thinking, I think the solution here is to just kind of lay low, right? Because you just be very, very generic. I wanted to be generic black. And that meant I could be African American, I could be Caribbean, I could be African, but I wanted to be generic black. But somehow I think it's something that happens the older you get. I really do believe that. I think at some point in my 30s, I was just like, what am I doing? Like, I'm African and I want to be African and proud. And this is why I'm Monica Shupikai Simmons and not Monica Simmons. Because I want to be Shupikai Simmons, right? I want someone to look at that and either identify it as Zimbabwean or ask me what's that, right? And that's how much I want to be African. It's why my kid's first name African. It's why I want to work in the African space. And I can't tell you, when I made the decision that I wanted to do this Africa thing, people genuinely thought I was like, Monica's losing it. Like, what are you doing with your career? Because I was doing well in the US, right? I was doing really well in the US, and there was a proper path, like a trajectory where I thought, I could be partner if I stick to this, I could. You know what I mean? But I really have a strong passion for solving on the continent. And some of it is like my dad. My dad was quite the Pan-Africanist, I grew up with my father's a historian. And so he would always talk about Africa through the lens of, what he saw happening with like Black America. And so he was a fan of like Malcolm X and, just the story of empowerment and what we can do for ourselves. And I always remember him saying that the foundation of Barbados in the Caribbean and the foundation of Singapore were around the same time, and Ghana around the same time, these three countries around the same time. And to see the visions were very similar for this idea of we could be excellence, right? Caribbean excellence, African excellence, Asian excellence. These guys, the founders around the same time, were these young founders who had dreams for their countries. To see where we are now, like in each of these countries, what are we doing right and wrong? And how do we do things? How do we fix things for ourselves to be better? And I remember we went on holiday with my dad. We went to Singapore, and his mind was blown because he remembers when it was just this port, ex-Malaysia type little place, just like Ghana, right? Just like Barbados. And so the idea that we are in control, we are in charge of what happens next. And so his generation, that was their job. What are we doing for our generation? I realized that doesn't mean me sitting in the US and working for PwC or Deloitte. It couldn't be that, because then I'm not really contributing to what I think we could be. And I feel passionately that there are a lot of people like me who would if they could. And so the solution is not everybody leaves the US and comes here, because like, we were talking about the remittances, right? We need those remittances, clearly, right? Clearly, we need them. So everybody has a part to play. The question is just, what's your part? And for me, I strongly believe that my role is that kind of channeling or helping to channel the capital from the Western world into Africa's best. And so my job is to know Africa's best, whether you're the best founder or the best fund, so that I can take you to the world and say, look what we've got. Can we get some of your money, please, so we can take care of ourselves, right? And say you're going to get the returns because these guys are the guys to back. And thankfully, we've got a few of those really good success stories where we're blazing. We've got the best companies and the best funds, and we are taking them to market and we are getting that capital, and it desensitizes them to the risk of Africa. Because then they go, do you know what? My friend, literally, I've spoken to like Japanese funds where somebody told them to put this money into this company called Move, right? And next thing you know, oh my God, it's doing so well. So, hey, Monica, if you see anything that looks like the next Move, let me know. And I go, of course I will, right? And it's because somebody took a chance on that the best in class. Do you see what I'm saying? And so what I want to do is to take the best in class for each one of these sectors across the continent and take that out. And so they can have a good story. So next time someone talks about Africa, the way that Japanese guy was talking to his friend, the guy in, I don't know, pick a place is going to talk about that excellent experience they had with that investment, and more money will come to Africa. But it's one at a time, and it's a process, and it takes time. And my part of it, like in this whole big story, is to kind of help desensitize and bring that capital, because I really do believe that that's the only way it happens. It's not going to just instantly happen. It needs people like myself who are kind of advocating for the Africa story, the Africa company, Africa fund, and I have, that's my job. I have to do that. So I believe in it passionately, and it's why I get up, and I'm half glass full, as you can tell. You have to be in my business because you get a lot of no's. You get a whole lot of no's, but you have to keep pushing because that's how it happens. It's incremental change.
Before I get into my rapid fire questions, right, I have one more question. Is there any important topic that we did not discuss today that you think we need to discuss that the diaspora or the investors watching right now will find, significant?
Probably just one thing. So with the assumption that a founder is watching this, what I want to say to founder is you don't have to know everything yourself. And so I think it's important to have a version of a mentor, like someone you can talk to, preferably someone who's done it before. And you would be surprised how many of the guys who are really succeeding are quite happy to take the time to speak to another founder. Because I think there's an understanding across the continent that we help each other. Sometimes that's through like an incubator. So if there's a local incubator in your city where they're helping founders, if you can be engaged in your community to kind of inform and help educate the next kind of the ones who are coming up, there's a lot of value in that. And so if you're one of the founders who's successful, please engage with your kind of local kind of incubator and help the next, generation of founders. And if you're a founder, go find that incubator and see if you can get a mentor. I just think it's really important for us to learn from one another, because as I said, the stuff online is not for us, right? The stuff, it's not. And we need to learn from each other. And so if I'm a founder in Ghana and I'm doing something in the fintech space, and I know there's this guy called whatever who's done really well, get in his face, have a chat with him, see if you can talk to this guy. He's going to teach you something, because that's how you're going to learn, and you're going to do better in your space, And the answer is it's going to be your way, right? Not Silicon Valley way. We have to figure this out ourselves. And so having that kind of network and mentoring and helping one another, education, I think is quite important in how we just get better.
We talk a lot about investing in opportunities. Let me talk about a different kind of investment for a second. Your health is your highest return on investment. That's why I created a brand called Bow Action. We make Vestly Pro adjustable weighted vest, currently on Amazon. The vest adds up to 35 pounds to your body weight, including wrist and ankle weights. If you're serious about investing in your health and not just your portfolio, and you want to support this channel and what we're building, please check out the link in the description below. Every purchase goes directly into keeping these conversations going. Thank you very much for your support. Okay, Monica, so here's my rapid fire questions. What is your biggest win so far?
Quitting the US and focusing on Africa, definitely. It was the best decision I ever made.
Biggest mistake?
Taking so long to do it. I'm trying to think.
No, that's it, man. That's good.
It's a hard one. Because I'm trying to think. Because a lot of because I was trying to think. It's not. I can't say mistake. I'm Christian, right? And I'm a big believer in everything for a reason. So it's very hard for me to say there's a mistake, because I think everything's actually worked out the way it's supposed to. That's why I'm like, I don't think there's a mistake. I can't say mistake. If I think about it as maybe something I could have done differently, um, it's how I approached working on the continent. Like, you know, maybe, but I did the best I could the way I could. You know what I mean? Because young family living in England, so I couldn't like just up and leave and then just move somewhere. I had to be based in the UK, and I still am. I've got roots here. My kids are at school here, because as I'm sure you can tell, one of the questions I have is whether I have to be here, sitting here in London. But because my role still feels like a bit of a conduit for the capital to come through this way down into Africa, I still believe that this is the right place. But I do wish I could spend more time on the continent. I do. So that's something I'm working on longer term. But it's certainly something I think about. But I don't. It's not a regret, because I think I'm doing what I'm supposed to, and developing the relationships out here as I'm supposed to, for the purpose of what I'm doing now.
One book that changed your thinking.
Um, Pillars of the Earth, which has nothing to do with finance. So before, I read it when I was in, written by Ken Follett, by the way, in case anyone wants to Google it. I read it when I was about 29, and I was in the midst of, what does this all mean? I was working in New York City. I was making a ton of money for a single person. I had a silly apartment with a silly view, just spending money. And I remember just going, what the heck is this life thing? And what am I doing? I was just living for me and just really enjoying life, but I had no purpose at the end of the day. And I was 29 years old, and my brain was not going get married, have kids yet. That was not on, it wasn't where I was. So it was very much work. So I got up to go to work, and I was working hard and getting money, but I just had no purpose. And I read this book because I love reading, and it is about this building of a cathedral that took generations to build this thing. A man, his son. I mean, literally. And I know it's going to sound a little wussy, but what it made me realize is that it's not about me. Do you see what I mean? So the book was about the cathedral. The book was not about the characters and the generations of characters that built the cathedral. It was about the cathedral. And so it's not about me, it's about Africa. Do you see what I mean? So I am part of this generation, or just wave of people that are doing something for Africa, but it's about Africa. It's about the bigger thing. You see what I'm saying? And so that seed was planted by that book, that it's not about me. And from then on, I really started thinking much bigger picture about everything. So the thing about me is I'm very big picture, very big picture. And so when something happens, I don't, I'm one of these, I always think everything is like a bit of a storm in a teacup, because big picture, it's not that important, right? That kind of thing. And so I learned that from that book. It literally changed my life, because I realized it's not about me and my little job, and it's not about what my bonus was, and it's not about how many countries I've been to, because I love travel, right? So this was a thing for me at that time of my life. It's not about any of that crap. It's not. It's actually, what am I doing? What am I leaving? What's the legacy? And what's the impact? And so I started, and I see it as the beginning of my dissatisfaction with my general life, as to what am I doing in this job? Employee XXY with a check, bonus. Hey, I'm one of X managers. I want to make senior manager. I want to make partner, blah, blah. Then what? Right? You know what I mean? Whereas right now, I can see a direct line between, I get up every day, and it's going to end up helping a life. Do you see what I'm saying? Like a proper real person. And that's why I spend my time mentoring young ladies. I believe in education. I invest in education and stuff like, because I think it's bigger picture, changing literal lives, because that's what matters. And that's what helps Africa get better. It's not, just generic stuff, right? So, and that book was the seed.
If you had 10,000 to invest in Africa right now, what would it be?
Oh, I know already. Education, an education platform, 100%. Because I think if you give people the tools, they'll fix it. And the source of it is education. So you can talk about healthcare, yeah, who doesn't want to invest in health, right? But I think education, it's the equalizer. It's the reason why I have my job today. It's the reason why I was in New York City. It's the reason why I'm sitting in London. It's the reason why I walk in the rooms that I walk in. It's because I have education. And that's access. So give people access and tools, and they'll fix it. So all the things that we think are a problem, and that's anywhere, educate people and give them the tools, and they'll do it. And I'm part of the tools part, right? The money is part of a tool. So I'm part of the toolkit. But the education is very, very important. And I would always invest in education.
One thing that needs to change for Africa to reach its potential.
We have to work together better. We really do. We have to work better. So, to my point around friction in everything, we just have to work better. I'm from Zimbabwe. The easy solution for Zimbabwe would have, when things started to go wrong in my country, would have been to use the South African rand. Because of various reasons, including pride. And I'm saying various reasons so that no one attacks me at some point and says, Monica, what's wrong with you? In addition to obviously national pride, blah, 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 all these things, we insist on reiterating whatever the next version of our currency is. And now we're basically a dollarized economy. And so food is more expensive in Zimbabwe than it is in England because we don't use the South African rand. And if we had used the South African rand, life would be better for everybody. And so that is my tiny example of how we just need to work better and think about what is better for all of us rather than all other things, which include national pride, which again is not an African thing. Because like I said, I'm living in England right now where everybody's talking about what does it mean to be British and English and national pride and American, right? What does it mean to be American? What's the definition of an American? People are very focused all around the world, including South Africa and Zimbabwe and Ghana and Nigeria, Kenya. What does it mean to be one of these people? And what does it mean? But when it comes to success as a continent, we have to work better together. We just have to. Otherwise, there's too much friction. We're losing money in the friction. That money doesn't get used for other things. So we're just losing money, there's too many holes in the pipes. If we use like a metaphor, water's flowing in, money's flowing in. It's just falling out. It's too many holes. We need to fix the holes. And to me, that looks like working together. So we need to do better working together.
That's a great segue into my next question. Do you think Africa can ever unite as one country?
I don't think country, but certainly we absolutely can and should unite. We absolutely can and should. What we probably don't have is like a central figure, a political figure who is saying we can. What we tend to have is like hotspots, certain areas, certain kind of leaders. But when I see what is possible, just what is possible, I get very excited. There's a couple of countries in West Africa where the new leaders are really all about their people, and you can see it. It's phenomenal. For me, I'm Southern African, right? So we tend to look at like what happened in Rwanda, and just phenomenal to go from where they were to where they are in this amount of time. Phenomenal. Imagine if everybody could do that, right? And obviously, it's not just money, capital, which is me. That's politics, policy, that's regulations, that's rule of law. Access to international sovereign, all sorts of things that come into play. But if you look at the bright spots that are there, you go, this is what's possible. And, the one thing I also want us to do is kind of cut us some slack ourselves, just give us a break because we're young democracies. And again, to that whole idea of we have to do things our way. I'm not a fan of kind of forced democracy needs to look like this. Because do you know what? The Middle East, that's not a democracy, right? So people go to Dubai and go, oh my God, Dubai is phenomenal. That is not a democracy. And people go, China's amazing. And it's not a democracy. So we just need to figure out what works for us. And, it would be nice if it looked like US elections or UK elections, because remember, those are different types of democracies themselves. But I just think it shouldn't be prescribed. I think we need to figure out what works for us, because then we can do it our way. I'm a big fan of Africa doing it our way, and we should be allowed to do that. We're young, we're young. We're somewhere probably I'm showing my age now. 30 years independence, right? You know what I mean? It's just now. It's like 250 years United States, right? Everyone's talking about the 250 years celebration. We're like 30 years in, 50 years in, 60. We're not even 100 years in. So, we got to cut ourselves some slack here and stop comparing ourselves to people who've been doing this since Magna Carta. We're babies and we're figuring it out. Let's allow ourselves some grace where we mess it up. If we get 10 bad years, it's okay. We can do better next time. Let's figure it out. But let's try and figure it out. We shouldn't give up on ourselves. We need to figure this out. We have to figure it out.
Monica, my last question is what I call the bridge, where every episode I ask the guest to leave a specific resource, a specific contact, a specific opportunity for the audience, right? So I wanted to know, what's that one thing you want to leave on the bridge?
The books are free, so I'll send you the link, and then you can share it with the viewers who are founders across the continent. And then I want them to use it as it's like it's a I remember when I told my mom I was writing a book, she was like, "Oh no!" She thought I was writing like a personal book type thing. It's a textbook. Okay, it is a very boring textbook, but it helps you figure out how to do things. And if you're a founder, an entrepreneur, you should want to know how to at least understand what options are available, what's the best option for you. Pick the one that works instead of just what's in front of you. And I think the book will help you do that. So you can get a copy for free. Yeah, you can get a copy for free.
It's an excellent read. It's not
Thank
boring like you're saying. I think it's very simplified for anyone who reads the book to understand it. The way you wrote it, the way you break it down. I'm not done yet, but I started reading it. It's an excellent read.
Thank you, homie.
Thank you for offering it for free. Monica, thank you so much for being on the podcast today. You're my first female guest. I'm super happy you came on. Can't thank you enough for your time. Hopefully we'll catch up soon again. Thank you so much, Monica.
My absolute pleasure. Absolute pleasure. Thank you so much for having me on the show.
All right, we'll talk soon.
Okay. Bye.
Bye.